Why is Notebook LLM an awesome tool? I think there's two reasons for it. So the first one is that it reads thousands of pages in a matter of seconds. And the second is that you can define a closed loop where AI can only look at certain documents or certain links and give you information based on that. So it's not looking into random places on the internet and giving you information that's probably not correct or verified. That's what you can use That's why Notebook LLM can be quite useful, because when you're doing something like stock market research or looking into an individual business, you want it to give you verified, accurate information. And that's what Notebook LLM can do for you. So let's dive in and see how we can do that. So what we're going to do today is we're going to download a set of documents for a company that I'm actually doing research for right now. So we'll download annual reports, announcements, presentations, and I've saved that all in a folder, and we'll upload it together. And once we do that, we'll ask AI to uh, act as an assistant, and we'll ask them a few questions. And uh, your instinct might be to say, oh, act as an investment analyst and give me the investment thesis. But what is even better than that is to actually kill your idea. Like, the best thing to do is kill your stock idea within the first hour, so that you can move on and find something else which is better. So what I've done for that is I've created a checklist of like 10 checkpoints, where I will ask AI things like, is this a fraud? Is this not investable? Or are there any problems? Like, give me all the problems first. And I will look at the problems and I will say, okay, do I still want to go ahead and look into this business, or not? So let's do that straight away. So when you go to Google LLM, Notebook LLM, you'll see the screen here first, and you just have to click on this. It's completely free to use, by the way, which is awesome. So it'll ask you to upload documents. So I already downloaded a few, so I'll just go and upload all of these together. So it's a bunch of like annual reports and announcements that the company has made. There's also a presentation in there. I've also downloaded the company's prospectus, because why not? The more the information, the better it is for us. And so we'll let it absorb the information. It only takes a few seconds. I was very impressed by the speed at which it can read documents. Like these are like at least 500 to 700 pages, and the tick mark actually means that it has absorbed the information already. So the first thing I'm going to ask it to do is to give me all the bad news, right? So the prompt that I have here is, act as an investment analyst and tell me what is the bear case. What are the areas of concern? What are the problems, red flags, fraud, if it is a fraud, and just tell me everything I need to know so that I can move on and find something else. So let's do that. So one thing I forgot to add here is the link to the website for that company. So what I can do here is I can paste the website, company's website, so it can act as one of the sources. And as you can see here, there's also other things that you can add, like if there's a YouTube video, you can add that. If there's some text you want to paste independently, you can do that. So there's a lot of things that you can do here, which is awesome. And now, so what I've done is I've basically told to give me the bear case, and it has given me the bear case for the business. And you can actually go through these and try to understand what the company, what Notebook LLM has analyzed so far. And you can ask it like follow-on questions. You can ask it to create tables. For example, I want to know, what are the sales growth and profitability growth numbers for the last 5 years, and it can do all of that for you quite easily. So it's quite powerful like that. And the difference, I think, is if you can do the same thing with obviously ChatGPT or Perplexity, but it will also have information from sources that might not be completely reliable, or sometimes it's not accurate. So it's good that you're creating this closed loop, so that you're kind of binding AI to tell you only information that you can fully trust. Yeah. So now when I look at the bear case, it's telling me obviously there's losses that the company is incurred because, so this is a racing technology company. So they provide software and services to racing companies. So they help manage the back end or help you provide the data for you to be able to sell, you know, betting stakes and stuff like that. Not sorry, not betting stakes, but you know, if a betting company wants to show the odds to a customer, then the back end is managed by this company. um, Yep. So cash burn is obviously a big problem. There's some accounting things that they've identified. So key audit matter being internally generated intangible assets. Their capital looks like they're capitalizing certain expenses. So that could be a potential thing to look into. So there's IP risk, there's competition, uh, customer and concentration, supplier concentration, obviously, because they're going to work with the big players in the betting industry. So there's going to be concentration. Yeah, key person risk, understandable. So you can go through that. You can ask why, why, or if you want to dig further into something, you can do that. And then, um, so what does AI say about it being uninvestable? It says it would be an overstatement to declare the business uninvestable, and here's the reason why. There's no explicit fraud. There's no, uh, big red flags that are being identified. That's what it's telling us. All right, so now let's give it another prompt. Now let's ask it to dig further into, and by the way, I have these 10 prompts, which is a simple table that I can show you on the screen here. And you can use these 10 prompts to just probe or dig deeper into like accounting issues or mismanagement or and stuff like that. And you can, if you want this checklist, I can share this with you completely free. So let me know in the comments below if you're interested in this checklist, and I'm happy to share this. So the second question is around increased competition. So we'll ask it, tell me about competition. What is the chances of customers switching to other competitors? Is there margin reductions? Is there a secure decline? So you're asking it to identify further problems that the business could face. And AI says, Notebook LLM says, it's highly competitive. So RAS operates within a fragmented industry, and there's a lot of competition. Looks like there's existing competition from these other businesses. So something to note for in the future. One thing you should remember is this is not like ChatGPT where all their prompts are or all the answers are automatically saved. So if you want something to be referenced, or if you want it to appear when you come back to this notebook, you need to save it down. So there's a button here which will say add to note. Just trying to find it. Yep, save to note. So you will have to save that here. And now the first question is saved down. Similarly, you want the second one to be saved as well. So I'll do that as well. Now, interesting thing about churn is, so the company says there's no experience churn, and so that is actually positive. Minimal churn. Yeah, so that's actually positive, which is reassuring. Now, margin reduction, obviously there's some margin reduction, but that's understandable because the business is growing, so they might have not capitalized fully on pricing and stuff like that. So not fully concerned about that. Does not indicate a secure declines, which is positive. Growing market, which is good. Increased demand. So quite a few positives for the business. I can't see any crazy red flags at this point. Failure to innovate, that's a risk. I don't see that that's currently happening with this business. long lead times, product defects. Yeah, all of these things can happen. First mover advantage, risk. Yeah. All right. So I didn't feel like there was uh, anything alarming that came out of this prompt. So I'm tempted to go to the next one. Now, now I'm concerned about the concentration risk that was pointed out earlier. So let's ask Notebook to tell me what are those concentrations looking like. Give me year on year concentration percentages for each customer, and and then let's do that, and then let's see what it comes out with. So now Notebook LLM has given me the concentration percentages, and let's look into that a bit more. And yes, it does say that there's customers contributing significantly. Now, the best thing is you can actually click on the reference and it will go to the exact page on the document that it found this information in, and it will call out where it has picked it up from, which is pretty cool. And then in the source document, source guide, you can actually see that it has broken down the prospectus into like key topics. So you can actually click on those and it'll give you like, it'll generate a prompt and it'll give you like further information about that. So it's really awesome from that perspective if you want to like break the document down and understand the bits and pieces. So that's why I enjoy working in Notebook, because it can give you very sharp information, but it can also tell you where you can read this further. So, for example, 48% of the revenues are coming from 4 customers. Now, who are these 4 customers? Let's see if it can tell me exactly where to find them. Maybe it's the next one. There you go. So these are the customers, not exactly the names of the customers, but it is giving me the breakdown, and I can actually go into this annual report and dig further. And it is giving me the breakdown by financial year, which is good. Now, another feature that you can see here is, so there's something called mind map, and that's a really awesome tool. So I'm going to ask it to generate a mind map, and once it does that, we'll be able to see how it has broken down the different elements. It has basically picked up all the elements of the documents and then categorized them by various categories, and you can actually go into that and see what are the different categories, and you can drill further. So what are the products and services I'm interested in understanding further? What are the products that they offer? And then in digital and media, wholesale, so you can break that down further as much as you want. And then if you want to dig in further, saying, oh, what does digital betting shop displays mean, for example, I can just click on that, and then you might say, oh, nothing really happened, but actually in the background there's a query running, and you'll be able to see that. So if you go back here, so here you go. So display what sources says about display betting, digital betting shop displays. So it has converted my click into a prompt, and now it's telling me, where it got it from and what that means, and further context and further information on that, which is very cool as a feature. We're going to keep going with the prompts, but I don't need to show you all the prompts. I think you're getting the gist of it. But there's one prompt which I really love to ask, which is, are the profits an illusion? So the prompt goes something like this: are the profits of a business an illusion? For example, free cash flow conversion is much lower than the net profits, and very high capex needs mean business is consuming a lot of capital and resulting in low ROIC or cash burn. So let's see what Notebook has to say about that. I think the answer might be not easy in this one because company is generating losses, so it's not going to be very applicable for this business. But in general, I like asking this question, saying, because sometimes the net profit is just on the books, but it doesn't transfer into cash. And if you ask this question, you'll be able to eliminate a lot of stock ideas purely based on this, because there's not enough cash being generated to justify the valuation that it currently has, or justify the attractiveness of this business. Now, let's see what the AI has to say about that. So, free cash flow to NPAT. So, net profit was 1.5 million and operating cash was 2.9. So, which is good. But then free cash flow is 1.8, which is slightly higher than net profit of 1.5 million. And then you can keep going like that for different financial years. So yeah, I'll dig a bit more into these and see see whether it's still making sense for me. I'm gonna see if there's another interesting prompt that I can put in. So maybe this one. I do like to ask about accounting red flags, because sometimes it cannot be, sometimes it's not easy to identify like red flags when you're going through the annual report. So AI might be able to help do that for us. So large receivables, or receivables growing faster than revenues, sudden change in auditors, accounting methods being changed, or weird third-party transactions. So let's see what AI has to say about that. I'm also in the background trying to see what the video overview does. I have not tried this feature before, so I'm curious to see what kind of video overview it can generate. The one thing that I wanted to show you was also timeline, which is pretty cool. I basically went here in reports and I said timeline, and this is what it generated for me. So if we can look into this, I think it's really helpful to understand company timeline. So it started in 1999, so it goes all the way back and tells you, like, in a chronological order, what it has achieved. Obviously, the data that I've fed is only from like 2020, 2019 onwards, so it won't be able to tell you like all of the history. But based on the resources provided, it has chronologically told me, or outlined, like what are the things that they've achieved, and what were the changes that happened in management or in listing and stuff like that. So I think it's a pretty good way of like getting a full breakdown by month or by time. And it also tells me the future. It tells me the cast of characters as well, which is very neat. Yeah, I like that. I like that a lot. So that was the timeline feature. Now let's go back to a question about accounting red flags. And so let's see what AI has told us. So revenue grew by 57% in financial year 22, but trade and receivables grew by 280%. So it looks like an anomaly. Might have been some reason for that. So we might have to dig into to understand that further. Now 40% increase in revenue, 49% receivable. That looks okay. But 38% increase in revenue, 64% increase in receivables, that might need some digging into as well. Sudden changes in auditor. Yes, there was a change in external auditor between 2021 and 2022. So BDO has taken over from 22 onwards. So which is not like a flag in itself, but it's always good to know something like this has happened. Sometimes it's just, when the company grows bigger and you want a more renowned auditor, and that's understandable. But if it's something untoward, then it's always good to know that. Change in accounting methods, so R&D tax incentive treatment. I don't know anything about that, so I'll have to look into that a bit further. Prior period adjustments, which is not usually good, resulted in restatements of earnings and contract assets by $329,000. Not a big change, so should be all right. Capitalization of intangibles. which is again has been identified as a key audit matter. So we'll have to look into that as well and see what happened there. And third party transactions, yes, there is an existence of that. So employment of family members, oops, that can be a bit of a concern. So the CEO is the son of the executive director, and the office manager is the executive director's daughter-in-law. So there's a lot of like family brought in to run the business. Not always, a red flags per se, but um, something to look into, something to be aware of, saying what you're getting into when you're investing in something like that. It looks like maybe it is family run. It depends on. Uh, so in this one, I would look at also what their stakeholder, I mean, shareholding is in the business, because if it's run as a family business, but the holding is not of a family run business, then that could potentially be an issue. Yeah, so these are the things that it has outlined for me. I'll probably go through all the fonts in my own time to just tell me what I need to know. And then if I still like the business, I will keep digging further. And uh, something that I wanted to show you as well is I have created a checklist with 43 prompts, and that is for doing a deep dive of the business. So let's say I go through all of my 10 prompts and they all are okay, like nothing major comes out, which will tell me to stop digging into this business. Then I will go to my next stage. And the next stage of that would be looking into the deep dive or doing a deep dive of that business. So I have 43 prompts uh, with uh, with a checklist as well. And what I will be doing is I will be reviewing this business through the lens of that checklist, saying, tell me what competition is doing, tell me what um, management incentives are, for example, or what is the industry and what is the growth rates and how fast it is growing and how sustainable it's going to be. So the checklist will help me identify what I'll need to look for, and I'll just copy and paste the prompts here into my Notebook LLM so that I can get detailed research from Notebook LLM. If you're interested in that checklist, I have created a separate video for that. I'll put a link in the notes below. Feel free to check that out. You can actually use that checklist in Perplexity or ChatGPT as well, and you can buy it on my website. It costs only 10 Aussie dollars, which is very very small number, but I really feel like the value that will add to your stock research will be much, much higher than the 10 Aussie dollars you're paying for the checklist. So feel free to check that out. And if you like this video, please give me a like. Please put a comment. Let me know what you think about and what I can cover next or in future videos. And thank you for watching. This is a bonus content because the video that I'd asked Notebook LLM to generate has been generated. It's an 8-minute video which talks about the story of racing technology. It's a nice little overview package. It talks about how the business has grown recently and how it all started. So I'm going to put this video up next so that you can have a look and see if you like it.
All right, welcome to The Explainer. Today, we are diving into the really fascinating story of RAS Technology. Now, this is a company that provides data and software to the global racing and wagering industry. So they went public just a few years back with this huge promise of growth. And now, we get to see how they actually turned that promise into real hard profit. Let's break down exactly how they went from burning cash to booking profits.
So let's just jump right in with the big headline number from their latest results. A massive 38% jump in revenue year over year. For a young published tech company, growth like that is a huge flashing sign that your strategy is really starting to work.
And that revenue growth? Well, it led directly to this number, a $1.34 million improvement in profit. That swing took them from a loss to their very first profit since going public. I mean, this is the milestone. This is what the market, and especially their early investors, were all waiting for. They had officially turned the corner.
But hold on a second. That begs the big question, right? Because it really wasn't that long ago that the company was posting some pretty significant losses. So how does a company go from burning through cash to actually generating it? Well, that's the story we're unpacking today. The strategy, the grind, and of course, the payoff.
To really understand this incredible turnaround, we have to rewind the clock. We've got to go all the way back to their IPO and take a look at the promises they made to investors when they first stepped onto the public stage.
So RAS Technology, or Racing in Sports as it's also known, wasn't some brand new startup. They'd actually been around for a while as a founder-led company, and they had built a really strong reputation in the pretty niche world of racing data. Then, in November 2021, they took the big leap and listed on the ASX, and the goal was crystal clear: raise a war chest of capital to fund some seriously ambitious growth plans. But what do they actually do? Well, it turns out it's a whole lot more than just data. They've got 5 core business segments, and they provide everything from the raw data feeds that power all those betting apps to full-service wagering platforms and even consulting. Basically, think of them as being deeply integrated into the plumbing of the entire global racing world.
And this quote, this really says it all. It's from their 2021 prospectus, and it perfectly frames their pitch to investors. They weren't just a data company. They were a comprehensive, one-stop-shop SaaS provider for a massive global industry. This was no small-time play. They were aiming to be an absolutely essential technology partner for some of the biggest names in the game.
And here's where the money was going to go. Out of the $14 million they raised, the strategy was obvious. The biggest slice, over 37%, was earmarked for international expansion, specifically into the UK and the US. Another big chunk, over 21%, was for pure product development. This was the classic growth-first tech IPO playbook.
But, raising the money is kind of the easy part. Spending it effectively, that is the real challenge. The period right after an IPO is often the toughest, and for RAS, it meant heavy investment and, you guessed it, mounting financial pressure. This was the grind. Okay, before we get into the nitty-gritty numbers, there's one key metric you absolutely have to understand. It's annual recurring revenue, or ARR. For a SaaS business like Ross, ARR is the holy grail. It's the predictable, subscription-based revenue they can count on coming in, year after year. It's really the best measure of the health and stability of the business.
Now, this slide tells such a classic story. On one hand, you see fantastic growth. In their first full year as a public company, FY22, they pulled in $8.3 million. The very next year, that jumped to over $11.7 million, and their ARR grew even faster. But then you look at the bottom line, a nearly $3 million loss in FY22, and then another $1.3 million loss in FY23. They were growing for sure, but they were spending heavily to make it happen.
And that brings us to the breakthrough. After years of investment and laying all that groundwork, the strategy finally started to pay off in a big way. This is where the story really pivots, from just a growth narrative to a profitability narrative. You don't even have to take my word for it. The company's own CEO, Stephen Crispy, called it a transformative year, and that word is just perfect. This wasn't just another year of growth. It was the year that the business model was truly validated, thanks in large part to some major new partnerships. And bam, here are the numbers to prove it. This slide really puts that transformation in stark black and white. Revenue didn't just grow, it accelerated to $16.2 million. ARR shot up by 43% to nearly $19 million. And there it is, on the bottom line, that swing from a $1.15 million loss to a profit of $190,000. They had finally reached the promised land.
So what was the secret sauce? How'd they pull it off? Well, the company points to 4 key things. First, huge strategic partnerships with industry giants like Stake.com. Second, they achieved what's called operating leverage. That's just a fancy way of saying their revenue grew way faster than their costs. Third, a really strong final quarter gave them that last big push. And finally, all that investment in their product, a key promise from the IPO, was clearly paying off, keeping their tech ahead of the curve.
Okay, so they made it to profitability. Story's over, right? Well, not quite. The story doesn't end with just one profitable year. Every successful company has to face new challenges. So let's look at the road ahead and the risks that RAS Technology itself sees on the horizon. And one of the great things about public companies is they're required to be really transparent about the risks they face. So we can look directly at their own reports to see what could potentially slow them down. This isn't just speculation. This is the stuff that probably keeps their board of directors up at night. They basically group their key risks into 3 main buckets. First up, regulatory changes. The wagering industry is super regulated, so any new laws like restrictions on advertising could hit their customers and, by extension, hit them. Second is service and market disruption. This covers everything from tech outages and cyber attacks to new competitors just shaking up the market. And third is event disruption. What if major racing events get canceled because of weather or a pandemic or anything else? That directly impacts the data they provide.
Which leaves us with this one final thought. RAS Technology successfully navigated that really difficult journey from a promising IPO to a profitable public company. They totally executed on their growth strategy. But now, the game changes. The question isn't just about growth anymore. It's about resilience. Can they manage these new risks and turn one profitable year into a sustained winning streak? Well, only time will tell. Thanks for joining The Explainer.